Hi everyone and welcome back to my channel. In this video we'll be covering the various types of work that an accountant at Goldman Sachs does. If you are new here, I'm Love, and on this channel we talk about early careers, books and personal development, and mainly help people find their dream graduate jobs and internships. So if that's something that interests you, then please consider subscribing. Okay, so let's get straight into the video by talking about all of the different teams that you could be involved in if you join Goldman Sachs as an accountant. When you join Goldman Sachs as an accountant in the finance division, you could be put in various different teams like product controllers, legal entity controllers, regulatory reporting, tax, and so many other teams. And because there's so many teams, the work done by each team varies quite a lot. In this video, we're going to be focusing on the work done by legal entity controllers, who are the team responsible for the ownership and financial accounting and control processes for all Goldman Sachs entities. Generally speaking, legal entity controllers do some of the most technical work out there as accountants, and as a result, their accounting knowledge needs to be up to date at all times. Okay, so let's get straight into it by talking about all of the different workflows that you could be involved in, and to demonstrate this, I've drawn up this diagram that's on the screen now. To demonstrate the cyclical nature of accounting roles, I've shown the projects only done in Q1, so Jan, Feb, and March of any given year, because typically speaking, the cycle repeats each quarter, so you do the same again in the following quarters. We can go through each of these tasks one by one and talk through what they involve, starting with month-end journals. Month-end journals are typically posted in the first 8 to 10 days of any given month for the previous month. So for example, in the first 8 to 10 days of January, we'd be posting month-end journals for the previous month, which would be December in this case. The month-end close is basically the collection of financial accounting information, review, and reconciliation of records each month. This is a fiscal reporting requirement for many companies, and it helps businesses keep accurate records throughout the year. So as I was mentioning earlier, we basically post journals in the first 8 to 10 days of the current month for the previous month. So in the first 8 to 10 days of January, we'd post a journal for December in this case. And basically, journals are posted for lots of different reasons. For example, it might be to record simple transactions like staff costs in the month, or it might be for more complex reasons like fixing accounting entries posted by other people. In accounting, we also have the concept of maintaining different accounting records for different companies that follow different accounting principles, known as GAAPs. So these are known as generally accepted accounting principles, and because each company follows a different GAAP, it means that we need to maintain a different accounting record for each country, and so we might post journals in different GAAPs to make sure that we're maintaining different accounting records and following the rules that are in that specific GAAP for that country. Okay, so let's go back to the workflow diagram now and move on to the second workflow, which is the P&L analysis. So in the second week of January, I'd be working on a P&L analysis where basically the team does a massive analysis of all of the different costs and revenues that the entity has faced in the current period, and it compares them to prior periods to make sure that the costs and revenues have been posted to the accounting systems properly and accurately to maintain, a very accurate set of financial statements, which we'll come on to later. The P&L or income statement of any company may look like this, and it looks really, really simple here. However, underneath all of this, there are several layers of revenues and cost lines which feed into each of these lines that need to be checked regularly for accuracy. For example, the net operating expenses line shown in this table is typically made up of a lot of different operating expenses for the business, such as things like staff costs, salaries, office rents, property taxes, advertising fees, and so on. So, for example, if we analyze operating expenses and find that the staff costs in the current month are far too high versus previous periods, we'd investigate this for errors in the journals or try and find a reasonable explanation for this increase. For example, an increase in staff costs can be justified by an increase in headcount, which would make sense. But if we can't find any such reason, then we'd have to investigate further or look for errors in the accounting journals. The same process applies when it comes to investigating trends in all of the revenues and expenses. As accountants, we either want a similar value for each period, or we want to find a reasonable explanation for changes between periods. Okay, so next up we have financial statements, which are probably the most important deliverable for the team. Financial statements can be defined as written records that convey the business activities and the financial performance of a company. Financial statements are often audited by government agencies and auditors to ensure accuracy for tax, financing, or investing purposes. So as you can see here, the financial statements consist of the strategic report on the left, and then we've got the audited financial statements on the right here, along with the notes to the financial statements, which explain the financial statements. This is the most important deliverable that the team has to work on because it's published on the website, and so it's all public information for all shareholders, stakeholders, and regulators, and they'll all be very much interested in aspects like the income statement, the statement of comprehensive income, the balance sheet, the statement of changes in equity, and the statement of cash flows. Financial statements are usually published at several points of the year, so they're usually published on a quarterly basis and then they're again published at year end, and therefore it's basically an ongoing cycle of publishing the quarterly financial statements, finishing them and then publishing them and then swiftly moving on to producing financial statements for the next period. In addition, financial statements are a big deliverable. As you saw there, it can be a long pack, and as a result, it's usually split up between various team members. So one team member may be responsible for producing, a certain aspect of the financial statements like the cash flow forecast, and then other people might be, responsible for preparing things like the balance sheet or the income statement or the notes to the financial statements and so on. Okay, so moving on to the next workflow, we now have financial reporting, which simply put is basically the financial statements but presented in a different way. You can see an example of a financial report on screen now, which relates to the US Federal Reserve. So financial statements are quite subjective and each company presents their statements in a different way, and so regulators have to design their own standardized financial reporting template with their own rules for companies to fill out so that they can compare the numbers for different companies. So as you can see on this template, it basically asks the accountant to fill out things like interest income, interest expense, and then non-interest income and non-interest expense and so on. And this information will all reconcile to the financial statements of the company. It's just asked in a different way so that the regulator can basically compare the numbers for different companies very easily. Because there are so many different regulators out there to which you have to submit different financial reports, you could be working on different financial reports all at the same time. And basically to demonstrate this on the workflow diagram, I've basically put financial reporting as FR1 and FR2. On the diagram, you can see that we do FR1 in January, February, and March because it's a monthly form, whereas FR2 is a quarterly form that we only do in January, and then we would basically pick it back up in April as it's a quarterly form. Finally, going back to the workflow diagram, we now have spare capacity. So if I'm not busy posting month-end journals or doing P&L analysis or financial statements or financial reporting, and I have some spare time, particularly just before quarter end starts, as you can see on the diagram in March here, I would basically be working on things like automation projects where I'm trying to make processes more efficient or eradicate them entirely if possible, trying to create time efficiencies for the team. I might be improving other workflows. So for example, I might look back at all of my other files that I use on a regular basis and trying to improve them, make them more efficient to use. Or I might be producing process documentation where we produce documentation as part of the team to make sure that, when people leave the team or we have new joiners, the knowledge transfer process can be quite easy and, it can be more and more efficient. That brings us to the end of the video. In the video, I tried to cover lots of different accounting processes and workflows that you get to be a part of when you're working as an accountant at Goldman Sachs. But of course, the industry is always changing, and therefore there's lots and lots of different things for you to get involved in, and it's constantly changing, so you get lots of opportunities there. But I hope this gave you a small flavor on what it's like to be an accountant at Goldman Sachs. If you found that video useful, please hit that like button for me. Thank you so much for watching, and see you in the next video.